I'm done. I'm done of being patient here.
You're a real YouTuber with these things, with this clickbait.
I learned from Tom Nash. No, but I like this thing that even if I know it's super clickbaity, I end
stop.
up clicking it and okay, let's be trolled.
And then you put the thumbs down on the video. We have Ether Square. Is it Ether Square with us?
Yeah, I invited him because I saw he's. I mean,
He
I
accepted.
think either was the first one doing the spaces about Palantir when he shared the dossier. Guys, if you haven't already done it,
Hello,
Ether
everyone.
Square
How are you?
here. Hey there. Made an amazing job in spotting a lot
Sorry?
of Palantir links.
Yeah. Well, thank you for having me here to talk. I need to go now because I'm in the middle of the street. But just wanted to say hello to you, Ronaldo, and to everyone. So that's it. Thank you. And there.
Thank you for being here.
Yeah, thanks for joining. We did. We wanted to do our first test on Spaces and see what it brings. So I'm glad that we get some good amount of people here. Arnie, how about you kick us off and let us know how you've been feeling this week, Palantir wise?
Well, when you're up 40% on a position that is more than 30% of the portfolio when it started, and in very little time goes boom to 40%, and then even faster drops below your average price, is always a trauma. I mean, you can be disciplined, you can be calm, how much you want, but seeing those huge variations always is annoying, at least. Annoying because you know that basically that is all potential cash that if you had it right now, that everything crashed again, you would be happy to deploy again, right?
Yeah, but at the end of the day, you're not really looking to go in and out of your position. So
on Palantir, no, that was
exactly
how I moved strategically. It was sometimes I don't know really if I can be defined as an investor or as a trader, because the reality is for certain companies like Palantir, I want to be an investor. I'm actually investing because I entered at DPO and gradually added when it was at $10 and then below, having my average price at 8.27 right now. And it is the position where I only want to add. I don't want to speculate on that. On the other hand, on the big techs in particular, I like when I see some easy trades. Easy. I say easy because I see a company that is extremely strong at an appealing valuation. Maybe there are some technical things that make me think, okay, if I hit here, the chances of being right are more than the chances of being wrong. And even if I'm wrong, who cares? Is Microsoft, is Apple, they buy back the shares, and in the end, people will always want them. With Palantir is
exactly. Let me jump in on you. Sorry, I don't want to change subject, but just because you mentioned the buybacks, and I know the buybacks, and I personally love the topic of buybacks. If we could just touch the base about NVIDIA a little bit, because you like AMD as well, handle that news. And we know in NVIDIA, they started giving a small dividend, minute, but also they were doing buybacks they announced a few months ago. So did you get any more news, any more outlook? Does this seem like something that's really potentially dangerous in the long run? Should a long-term investor in NVIDIA and AMD have any concerns?
Well, I have to be very clear on that. AMD is around some 20% of my portfolio. I love the company, I love the management. On this specific topic, the picture I have is not completely clear. That is why even if the price is already outrageously low, right now I'm not confident in adding, because it's like, okay, the direct impact of the US preventing NVIDIA first, but the same thing could be said of AMD, since they sell as well GPUs. Is not the direct impact is not big. Maybe is bigger for NVIDIA. For AMD, the GPUs they are relatively small, so we say even if the entire GPU market on China gets crushed, it hurts, but it's not the end of the world. But we're talking about two companies that in reality depend a lot of for China overall as revenues. And what scares me is not the direct impact now, but the deterioration of the relationship with the US and the potential things that could arise for Taiwan. That is also the reason why I had Apple as a huge position before, and I decided to leave it when the price dropped. Because if there is one thing of Apple as a potential risk is that being hard for Taiwan, where also AMD and Nvidia get the chips from TSMC, but also for the relationships with China and US. Because it's true that right now China benefits from the technology coming into the US technology coming into China, but what made me really think was how easily the US decided to ban Huawei last year or 2 years ago. That tells you that when the relationships get harsh, or there is the suspicious that certain technologies can be used for military purposes, something like that, that starts becoming a risk.
Yeah, but let me jump in, Arnie. Sorry, 1 second, because the thing is, and I think I've mentioned this to you, but I don't want obviously any conflict, any war between any countries, let alone the US and China. But the thing is, until it happens, this will always be a risk and a talking point. So the thing is like, should we keep someone that would have had this China fear, wouldn't have made money in Apple, wouldn't have made money in Tesla, and the rest of it. So it's like, are we almost better off just ignoring it? Because even if nothing ever happens, this risk and this talking point will always exist.
Well, I see as China as a double-edged sword, because on the one side you have one of the biggest economy, so going probably to be the biggest economy. So the potential growth there is just amazing. On the other hand, to make business, and I mean good business there, you basically have to compromise. And we see it clearly with Apple. Apple is, we can say, friend with CCP. And it has behaviors in China that it does not with US, like allowing the government to see what's inside a telephone. In the US, they can't do that. So there is the opportunity, but there are also a lot of risk. I think one needs to be aware, because, for instance, I can't say people what to do. I can say what I did, and what I did was okay. I had a huge position in Apple last year, and I said, okay, the moment tension starts rising in Taiwan, I know that something bad could happen there. The problem is not one product. For these things, the problem and the risk is that what starts from one thing can deteriorate in many things. And this is something I learned last year with Baba. It starts from Jack Ma missing after a speech, and then boom, everything compounds on the other things. So the point here is, even if you are a complete expert, I think China can be unpredictable on these things, because they have so much power that they can change the things very rapidly to shape the narrative that reinforces the CCP the most.
Okay.
So talking about the failure points, I think it's very important for every company to understand, okay, what can put the company from a business operating standpoint in difficulty. Let's say Tesla is forbidden to sell in China because the relationships deteriorate. Tesla would have a major impact in terms of revenues and net income, because China is the most profitable part. But overall, Tesla does still fine. For AMD and Nvidia right now, if TSMC stops, it starts getting a problem. Also for Apple. Until TSMC starts and completes the manufacturing plants in the US. Maybe that's why I'm really passionate about Palantir, because the risk I see with Palantir are related to the execution, but the execution means they're not able to fulfill the big dream of becoming the operating system of a modern enterprise. That is like the $1 trillion dream. But even if they just do fine and they stay on top of the edge, that is still a great company that is not damaged by the macro, by a government party that can change things very quickly. So I see a lot of resilience there that I'm willing to pay for. It has its own problems. It has the dilution, that is a pain. But if you pay a low price enough, even considering the dilution, you can be fine.
And just to be clear, Arnie, on the dilution, like your chart show us, it is reducing in function of increasing revenue, correct? At least we could sleep with that at night, sleep well with that.
Well, yes. Basically, you can say the important thing is the company grows much more than it is diluting. Until that is fulfilled, shareholders benefit. They don't benefit in terms of earnings, because right now there are no earnings, but there is a free cash flow, and actually a very good free cash flow. So the cash is produced. The problem is every year, every quarter, the company basically gives a chunk, a part of the company to its employees, diluting the remaining shareholders. That is something not good for shareholders, but basically you are betting that the cash saved is deployed in a way that can sustain the company to keep growing more and more as it grows, so that the dilution gradually starts decreasing.
Well, that's
Probably
why they have the war chest, right? That
Yeah.
war chest is going to come in handy at some point.
Yeah, exactly. In the last presentation, they showed that they have 2 billion in cash. They called it war chest. That is a weird choice of words, considering we are talking about a defense contractor, and the CARP underlined many times, hey guys, the world is more unstable than it seems. So it's important that they are ready for the worst. Personally, I would really love to see them deploying this cash effectively, especially to demolish the dogma that they are terrible capital allocators, because up to now, the capital allocation decisions we see, the SPACs, financially speaking, they were a fiasco. It's like
when you mention the word SPACs, I cringe. It hurts me when you just say the word.
Yeah, probably. I mean, this clickbaity title we put on the spaces. If we wrote SPACs, that would have terrified everyone.
Yeah, nobody would have joined. We would have been alone. We are fed up of hearing about SPACs. They should just buy the companies completely at this point, basically.
Well, seriously, with the money they spent, let's say 400 million, that 400 million now are worth less than 100. Maybe I'm wrong, but the order of magnitude is that.
Yeah, exactly.
And many of these companies are worth just few millions now. So potentially at least one, I'm sure they could have bought.
You know, there was one of your articles, Arnie, where I loved when you mentioned that, because just for everyone's information, Arnaldo, like I said before, he wrote 3 amazing articles on a Substack about the network effects. And when you were talking about the SPACs and we were going through it, and I was helping you create and format, I was saying, Arnie, don't try to sell me this SPAC thing too much. I said, I hate this idea. So like, let's call to light that
it's like the word you don't need to say.
It was like, let's not pretend that it was like completely genius and everything is smooth sailing, because it caused a lot of people a lot of pain, or it causes a lot of people a lot of pain, including myself. But all that to say, listen, obviously now with the financial disaster, it doesn't seem like a smart idea. Maybe it'll pay off. But there was two amazing points that I think that could potentially bring a lot of light to this situation, especially this dark situation. One is, I'll take credit for it. I mentioned that at least they're making contact with lots of good professionals, engineers, and technologists in many different spaces. That was one. So in the worst case, they could find like a couple hopeful geniuses in some of those companies, and they could jump on Palantir when the SPAC company goes bust. Secondly, Arnie, it's slipping my mind right now, but there was another one that I told you that I love that you had mentioned about the SPACs and the potential future.
Look, I would make one step back here. We said that financially speaking, the SPACs were awful because if you invest a lot of money and after 1 year that money is worth very little, financially speaking, you can say you made a good deal. That's the premise. However, I've always been interested in, okay, these guys are not stupid. If they do something, it's probably me being stupid, not understanding what they're doing, rather than them being stupid and throw money casually. And I realized that looking at only the financial numbers for the SPACs was wrong. We don't have to think of them putting the money in the SPACs to make money on the SPACs directly, but we need to make one step back and think, okay, is Palantir only a product company or there is something more? And that something more, in my opinion, is that Palantir should be considered as a network. Why? Because we're not talking about a product that stays there and dies there. Palantir is structured as an agnostic company that can fit in whatever situation, in whatever sector, in whatever problem. So every interactions they have, potentially they can benefit from it. It becomes a network. You start from few clients, the very high spending clients selected from a couple of interviews of Carp. We can see that voluntarily they choose to work with some companies and not working with other companies. Why? We don't have to forget that Peter Thiel was the first investor in Facebook, and the biggest network we know, which is Facebook, didn't immediately open to everyone, but started from a niche. And the niche Facebook had were the Ivy League college students. Why they are so precious? Because basically they are super well connected and they are considered the top of the top. They are leader in their sectors. And what characteristics are shared by the Palantir clients? They are among the biggest brands in a certain industry, and therefore they are extremely connected. So if you are an integrator, able to connect in whatever sector, in whatever problem, potentially, the more exposure you get, the more you benefit. So when Palantir deals with Airbus, potentially gets one step closer also to all its customers and suppliers. And since software is sold not only from technical reviews, but is sold a lot by word of mouth, and to judge the efficacy of a software, you need to test it. It is way easier if a top client like Airbus makes a reference, hey, yeah, we have been working with Palantir for 5 or 6 years. They're amazing. We developed this Airbus platform called Skywise that connects 130 airlines. Guess what? Every new point of contact becomes way easier, and potentially every client of Airbus can become much easier client for Palantir. So if we consider Palantir not only as a product, but as a network, we can start seeing that some strategic choices that could look awkward, like the SPACs, maybe have a certain sense. What I'm meaning with that is that the value in connecting with these companies like SPACs can be bigger than the money they spent. Of course, right now we see only the disaster. But let's make one step back. When you become client, when you get a partnership with Wejo, you basically get one step closer to all the network a company like Wejo is generating. Wejo, by definition, wants to become an aggregator and connect many automotive companies, insurances, and EV infrastructure. Therefore, every client they are able to get is one step closer to Palantir. And we are already seeing some effects of it. Because, for instance, Wejo needed to raise more cash. Sompo, which is the biggest clients Palantir have in Japan, put money on Wejo. Palantir is developing an EV infrastructure operating system. The partners, among the many, there is Sompo. There are network effects, for instance, generated with Black Sky, because Black Sky is a company operating in the satellites industries, and that puts it in a position that it needs to deal with government agency, and is gradually approaching also the commercial clients. Palantir has all the IT infrastructure to make sense from data obtained in space. So it is also in the interest of Skywise, also because they could monetize it more, to encourage new clients to use satellite, to use Black Sky, therefore also getting one step closer to Palantir.
To Palantir, exactly. Arnie, the way you phrased it was, sorry, what I was referring to in the past and what you're talking about in the article, this is how it's phrased, because I really told you I love the phrasing of this. It says, being involved with the SPACs and creating the networks, it exposes Palantir to problems which could generate archetypes for other future Palantir clients. So it's like sort of practice, you know, they're like, okay, they're invested in these companies, they're seeing all these different industries, how they work from like maybe a startup perspective, and now they can develop their platform and their system in a sufficient way for them, and then use it in the future for future clients.
Exactly. Imagine you are like a white paper, and you learn from everything you write on that white paper. The more things you write, the more you learn. And the more you learn, the more you can replicate what you learned in a more effective way to solve new problems. Palantir should be seen in that way, in my opinion. From a product that improves the more it is used, thanks to network effects that are internal of how the platform is built. So more users generate more data, and more data means the entire platform becomes more efficient, and that helps the development of better recommendations. Everything becomes faster. Like how it is possible that in 2 years the sales cycle went from 6 months to 2 months, because by generating the archetypes, by doing the processes over and over again, they get better. The platform gets better, and basically they softerize everything. So the more problems they are exposed, and young companies like Wejo and so on have by definition a lot of issues they need to address, because if they want to conquer a new industry, they need to do something different. So the more they do things, the more they improve, and the more what they learn could be translated to other clients, so could be transferred into the network, because once you learn how to deal with a certain problem, you can softerize it and make it valuable also for another company. For instance, having had BP for many years, for sure it worked very positively for Palantir to get Exxon, which we know that is already a big client, because everything they developed for BP obviously should be adapted, but the key problems that arise for BP probably arise also for Exxon. So the more industries you absorb, you know the know-how, how the business works, what are the
Yeah,
issues,
but
the
imagine
more you
selling
improve.
that. Arnie, imagine when you go to your potential client and you're like, oh, you know what? For your competitor, this is what we set up. He was having these problems, and this is how we solved it for him. And then the potential client is going to be like, oh shit, I have those same problems. He's going to be like, okay, give me some of that, you know.
Yeah,
And
exactly.
speaking of
So you
speaking of
see,
SPACs and Wejo, I'm surprised that Richard Barlow's not on the call. Is he here? Richard, if you're here, let us know. He's omnipresent on social. That guy. Go ahead, Arnie.
so as you said, you see how difficult it is for the first time when you need to learn how things work. I can show you this example. When I study a company in a sector that I don't know, it is very, very hard to understand, okay, who are the key players? How the business is structured? How this company makes money? Why this company makes money better than the other companies? But once you know how the industry works, whatever company is in that field, you know already what to look at. Imagine this done for an enterprise software. The problem for Palantir is that it's a bit ambitious, saying we want to become the operating system for the modern enterprise, saying we want to be in every sector. How do you do that? You need to have at least one reference client in that sector. And once you have, let's say, Stellantis as a client, then you gradually go down and solve and get the smaller clients in the sector. You do that for one sector, and then for the other sector, and then for the other sector, and gradually you reach that tipping point that even the smaller players need to adapt.
Yeah, agreed, and that's understood. Arnie, you mentioned something just a minute ago that made me think. So if we'll change topics but stay parallel to it, about asking the right questions. You mentioned that. So I want to know, when you're doing your research, and this is not really to like sing your praises, but in reality, I do think you do a very good job in answering the questions that a lot of investors have and a lot of issues that are brought up, especially on the socials. You have always a justification, but it seems merited because if it was BS, honestly, I wouldn't stick around with someone that I thought was giving BS answers. But you do seem to always have a good reasoning for what people call a major issue with Palantir. So my question is, how are you personally, specifically, doing the homework or know what questions to ask or know how to dig deeper? Who taught you that? Do you know only for a company like Palantir because you're interested in it? If it was another company, would you be able to dig deeper and search a little more? Like, where did you learn the style of really digging further than the slides that are presented?
Well, I can say that on basis I'm quite paranoid, and if you add paranoia on top of professional expertise of equity research,
and also like having that nasty habit of wanting to eat 3 times a day.
yeah. So, well, I learned from many mistakes. Like last year, I said I started from having a huge position in Apple, and then I gradually added Baba, and Baba was a big hit because basically I had Apple up to 70% while Baba destroying the portfolio. If that happens, it means I made something wrong. There was some questions I didn't answer. So every mistake comes from a question that is not answered. Shyam said every problem is a data problem. So with Palantir, there are so many things I understood not understood, but I had an intuition early when they announced the DPO that it's one of those companies that could be an alpha. But the question is, how can we see? How can we know that it's an alpha? So you have to triangulate the information you have to say, okay, is it really, or is it a trap? Because the worst thing you can do in investing is spending a lot of time, money, and time in doing research for things that actually don't work. So rather than searching for confirmations, what I learned is try to spot the weak points. As we said before, what are the weak points for Palantir? The SBC is a weak point. We are learning that the government is lumpier than we expected. That could be considered a weak point. Were we really aware? No. Things move very slowly. And that is something I learned by investing in Palantir at DPO, doing 3x for one day or even 4x. And then, boom, everything disappearing. Okay, I sold a bit, but still, I realized that all the contract rain that was happening would have not materially moved the revenues and say, okay, now the revenues go to X. Because everything in B2B is slow. So even if you get a big contract, that contract doesn't mean that becomes revenues, boom, immediately. Everything takes time. So every answer is a question I started asking myself, because it's not that company, as we mentioned before, that I want to trade in and out. I can say I rosic very, very hard that I spotted Tesla was an alpha early on, around 2014. And it was one of the very first trades I made when I just wanted to learn, okay, how can I send an order? It was the second stock I bought, and actually I thought I did something smart by selling at loss, but what I saw was a gain due to the currency effect. Having seen that with Tesla, I understood that was an alpha company, but I didn't capitalize on it per nada, for nothing. I said, okay, I asked the wrong questions, because when I was working as an analyst in 2016, 17, those years, I looked at Tesla and said, okay, the product is good, they're executing very well, but I can't invest in a company that burns cash. And then I stopped asking questions. So I left it there. I don't want to do the same thing with Palantir. It's a company I want to have for the long term and to invest heavily on it. But to invest heavily, you need to have the combination of many factors altogether. Because you can have the best company in the world, but if you buy it at the wrong time or with a wrong position size, that could really hurt you.
Exactly. Speaking of which, Ani, remember you made me that note before, and you were mentioning buying it at the right price. Or some people say, "Oh, I'm going to hold it for the long term, so it doesn't really matter how low I buy it." But you were arguing
No, I think
the other
that
way.
is just an excuse for being down.
But you were saying, especially in the long term, if you plan to hold it a long term, you should be really thoughtful of your entry price, because that'll make huge differences 10, 15 years down the line.
I mean, think what's the difference between buying at 5 or buying at 10 and the company goes to 200? The difference overall is just huge. So every euro difference, dollar difference in the purchase price, in reality have an exponential effect that must be taken on. That's why I'm paranoid in, okay, I study the company, but I don't purchase at whatever price and say, oh yes, but it's for the long run. Because if you want to invest professionally and actually do very well, you need to be extremely careful. That doesn't mean that you always need to wait for the perfect price to enter, otherwise you don't touch. It means that you need to do very deep due diligence. and not overpay. But not overpay means you need to be careful when you purchase. Because if you buy Palantir at 30, you can buy a company that is great, potentially in the future, but think how much you lose in that range from 8 to 30. I mean, the range from 8 to 30 could be already be a life-changing money.
Yeah, exactly. And that's talking in the long term. Imagine in the short term, for example, Palantir 2, and myself included, buying obviously above 20. In the short term, you're at a loss. So forget 10, 15 years, doing a 5x now we're talking about the difference between a 5x or a 10x or a 20x. Okay, fine, 15 years down the line. But what about for the next 5, 10 years, man? You're going to be in the red for a little while. So yeah, very important to know your entry price, something that I was not fully aware of, Yeah, because sometimes the people, they sort of sell that story. They're sort of like, oh, it's for the long
Well,
term.
I remember
It
Tom
doesn't
Nash
matter.
saying, oh, yes, I don't care of having bought at 15 or 20 because I'm here for the long run. True, but it all depends on how much you put compared with the full size you want to have.
Exactly, because that method only works if you consistently say, okay, I'm going to put $100 a month for the next 10 months, for the next 10 years. Then fine, then you'll catch the average on the up and the down. But if you go in with like a huge $5 amount, 5-figure amount off the bat at Palantir $25, $20, and then you only dollar cost average with $100 at a time, then you're toast for a while.